Welcome to the PAI Morning Briefing. I'm your host from PantheonAI, and today is February 19th, 2025. Good morning, everyone. I'm excited to bring you all the details and insights you need to navigate today's financial landscape. Let's dive right in.
Let's begin with a quick market overview. The S&P 500 is currently hovering around 6,117.96, with a barely noticeable change this morning, up by approximately 0.003%. Not much movement there, yet it's important to remember that when the giants shift, the ripple effects can be profound. Over in Dow Jones, we're seeing a slight dip to about 44,416.85, down roughly 0.137%, hinting at a bit of caution among the blue chip stocks. The Nasdaq, always the bellwether for technology sentiment, now sits near 20,001 with a modest uptick of around 0.03%. And don't forget our small cap darling, the Russell 2000, trading at roughly 2,290.35, showing a stronger gain of nearly 0.385%.
Cryptocurrencies aren't out of picture either. Bitcoin is trading at approximately 96,387.54, up by nearly 0.815%, while Ethereum is following suit, trading around 2,717.61, increasing by almost 1.787%.
Now, while these numbers might seem small in isolation, they set the stage for a day brimming with potential. They remind us that even when the numbers are doing a subtle dance, there is so much more brewing beneath the surface. And speaking of what's brewing, let's get into the meat of today's discussion, the major market trends and news shaking up the financial world.
In our deep dive this morning, one story that cannot be overlooked is the unfolding situation with Nikola. Yes, Nikola, the embattled electric vehicle maker that had once captured investor optimism, is filing for bankruptcy protection under Chapter 11. It's a turn of events that has sparked heated discussions among investors, analysts, and even your beloved market commentators. The news has been making the rounds repeatedly. We've seen titles like "Another EV Maker Goes Bust" as Nikola files for bankruptcy, and "Embattled EV Maker Nikola Files for Chapter 11 Bankruptcy Protection" crop up over and over again. The company plans to pursue an auction for its assets, and interestingly, it will maintain limited operations during this process. For those of you following the electric vehicle market, this story offers a cautionary tale about the volatility and high stakes involved when it comes to innovation and investor sentiment.
Now you might ask, how did we get to this point? Well, Nikola was once the darling of speculative investments, but like many high-growth technology startups, it had a rough road trying to secure consistent financing and a viable buyer. The bankruptcy filing reflects deeper issues in the alternative energy and EV space, where competition is stiffer than ever and investor expectations can sometimes create extraordinary pressure. It raises the question, are we witnessing more companies in this sector struggling to balance innovation with sustainable business models?
And speaking of challenges in innovation, let's pivot to another recurring theme this morning, the commentary from none other than Jim Cramer. His top 10 things to watch in the stock market on Wednesday have been generating plenty of buzz. His commentary suggests that Wall Street, having closed at record highs on the previous day, might see a mixed open today. Many traders are keeping a keen eye on the morning figures to catch any signs of a shift in momentum. Jim's list of pointers is always worth a second look, not only because of his track record, but also because it helps us contextualize the numbers we're seeing across the board. When you consider the strong earnings season of late and the ongoing macroeconomic debates, his observations offer timely reminders of the interplay between market sentiment and hard data.
In related news, another article that has caught my attention delved into the discussion on interest rates. Titled, "Why Both Donald Trump and Elizabeth Warren May Be Right About Interest Rates," the piece presented some intriguing research suggesting that our current interest rates are higher than they should be. Now, whether you lean to the political left or the right, this observation resonates with investors across the spectrum because interest rates fundamentally drive investment decisions. Higher rates generally push more investors toward fixed income products, while lower rates can embolden riskier, growth-oriented plays. The piece challenges the conventional wisdom by positing that perhaps current rates are stifling rather than stimulating growth. With debates raging from Washington, D.C. to Wall Street, it's a subject that begs both careful analysis and thoughtful questioning.
What does it mean for sectors like real estate or technology if the cost of borrowing remains elevated longer than anticipated? These are the kinds of questions we, as investors and market watchers, need to consider on a daily basis.
Now let's move on to a comprehensive coverage of some of the most important stories making headlines today. First, we have several iterations of the Nikola bankruptcy story, as we already discussed. The repetitive nature of these headlines underscores just how significant this development is for the broader EV landscape. When a name like Nikola collapses under financial stress, it opens the door for a slew of questions about market sustainability and the overall health of the EV sector. It's a stark reminder that innovation comes with its own set of growing pains, and sometimes the best engines aren't enough to navigate the choppy waters of modern finance and technology.
Next on our list is the repeated coverage of Jim Cramer's top 10 things to watch this Wednesday. It seems that his insights are now practically a morning ritual for many traders who use them as a compass for the day ahead. One could argue that in today's fast-paced markets, such curated guidance is more essential than ever. Whether you're a seasoned trader or a retail investor trying to understand where to allocate your capital, these lists can help highlight potential winners and cautionary tales alike.
Then we have the coverage about interest rate debates featuring commentary from political heavyweights like Donald Trump and Elizabeth Warren. It's not every day that we see bipartisan perspectives aligned in their caution about the economic impact of current interest rates. And while it's true that market fundamentals are what ultimately steer economic outcomes, the discussions surrounding rates add a rich layer of depth to our understanding of fiscal policy. It's fascinating to watch how political narratives and fiscal policy interweave to create the broader tapestry of the market environment.
As we wade through these headlines, let's talk about what they mean for different market sectors. In the realm of technology, the modest gain observed on the Nasdaq suggests that tech investors are perhaps feeling cautiously optimistic despite some underlying uncertainties. Even though the numbers may seem slight at face value, they are planting the seeds for what could be a very dynamic session in the tech arena. It's worth noting that technology, as always, is a heavyweight when it comes to determining market sentiment overall. The advances in artificial intelligence, cloud computing, and sustainable tech investments continue to drive investor behavior and risk appetite.
In the energy sector, developments related to alternative fuels and renewable energy stocks, such as those linked to EV makers like Nikola, continue to be a focal point. While traditional energy markets have their own challenges, the shift towards cleaner energy sources has introduced a whole new dimension to investment portfolios. The struggles of companies like Nikola force us to take a closer look at operational efficiencies and the importance of balancing high-tech ambition with pragmatic execution. Sometimes you have to laugh at the irony. As we cheer on the innovative strides in energy and transportation, the road to commercial viability proves to be a bumpy one. It certainly gives us all a reason to pause and reflect, perhaps even joke about needing a jumpstart from our morning coffee.
The finance sector, meanwhile, remains deeply intertwined with the ongoing debates on interest rates. Financial institutions are often the first to feel the effects of rate adjustments. Rising rates might boost margins for banks, yet they can also lead to a contraction in borrowing as both consumers and businesses weigh their liquidity options. The narratives emerging today remind us that the balancing act between stimulating growth and ensuring financial stability is a constant challenge for policymakers. Investors in finance stocks, therefore, will be closely watching not only the economic data releases but also the political signals that hint at future rate movements.
And how about the most volatile segment, cryptocurrencies? Bitcoin and Ethereum continue their upward moves, with Bitcoin showing nearly 1% growth and Ethereum surging by roughly 2%. These numbers, while impressive, should be taken with caution due to the inherent volatility of the crypto markets. If you're a trader in the digital asset space, you know that the crypto world often operates in a realm of its own. The steady gains we're seeing today could be the calm before a storm of regulatory news or perhaps another round of technological breakthroughs. It's a volatile but exhilarating aspect of modern investing, where fortunes can change in a matter of seconds.
Now let's switch gears to a detailed sector analysis, starting with technology. In the world of tech, we're watching trends related to several key factors: innovation in artificial intelligence, cybersecurity advancements, and the ongoing battle for 5G supremacy. The modest gains seen on the Nasdaq today hint at a cautious optimism among investors. Despite global headwinds, tech companies continue to out-innovate their competitors, and the underlying growth potential remains robust. Yet, as always in tech, the devil is in the details. With production challenges and supply chain issues still lingering for semiconductors, investors need to remain vigilant. One might argue that even our smartphones, which we hardly give a second thought to these days, are a testament to the fact that innovation is a marathon, not a sprint.
In the energy sector, the news around Nikola serves as a critical reminder of the challenges facing many alternative energy companies. The shift towards renewable energy is as inevitable as the sunrise, yet the path is fraught with financial and operational hurdles. Companies in this space must walk a tightrope between explosive growth expectations and the practical realities of capital-intensive operations. Meanwhile, the traditional energy players are not simply sitting back. They too are investing heavily in renewable technologies, knowing that the future of energy is evolving. This duality creates fascinating investment opportunities but also necessitates careful risk management. As investors, we might ask ourselves, how can we best balance our portfolios in a world that is rapidly moving towards sustainable energy while still valuing the stability of established energy stocks?
Turning our focus to the finance sector, it is evident that interest rates are playing a crucial role in setting the stage for both short-term trading dynamics and long-term investment strategies. The debates highlighted in our news today, where figures like Donald Trump and Elizabeth Warren raise concerns about the profitability and broader economic impacts of current rates, are more than just political noise. They underscore real economic apprehensions that could influence hiring practices, consumer spending, and ultimately the bottom lines of major banks. As we head into the next few months, the interaction between fiscal policy and market performance will likely continue to be a critical area of monitoring. This raises some intriguing questions for our audience. In a world where the debate around interest rates is becoming increasingly heated, how should we adjust our risk profiles and investment strategies?
Expanding our lens to global market implications, today's happenings in the United States have far-reaching effects beyond our national borders. The interconnectedness of global markets means that shifts in U.S. indexes, interest rate policies, and energy trends reverberate through Europe, Asia, and beyond. For instance, a slowdown in U.S. technology growth could impact export markets in Asia, while fluctuations in energy stocks may accelerate or dampen the pace of green investments globally. Investors should therefore remain aware of geopolitical developments and international economic trends. As regulators in Europe push for stricter environmental standards and Asian markets continue to expand their technological capabilities, the interplay of these forces will shape our investment horizons for the coming years. It's a complex mosaic, but one that offers countless opportunities for those who are prepared to dive deep into market dynamics.
Let's now transition into some expert insights and predictions. From my perspective, and drawing on a blend of historical data along with current trends, we are likely to see continued volatility in the EV and tech sectors. The bankruptcy process of Nikola, as painful as it may seem, provides an opportunity for other companies in the space to pick up market share if they can demonstrate robust fundamentals and sound management practices. Meanwhile, the interest rate debates serve as a reminder that the macroeconomic environment is anything but static. We might very well see a period of cautious optimism as investors weigh the benefits of a recovering market against the backdrop of political and economic uncertainty.
Some of you might find it humorous that while we're sitting here analyzing billion-dollar index fluctuations and corporate bankruptcies, everyday life continues in all its unpredictability. One moment you're debating whether to invest in a tech startup, and the next you're wondering if your coffee budget could have been better allocated into a diversified portfolio. It's that very human aspect of investing, the intermingling of numbers with the day-to-day grind, that makes the financial markets so fascinating and at times so unpredictable.
Returning to the conversations about innovation and disruption, I invite you to consider this. Are we in a period where market corrections, like the one we're witnessing in the EV space, might eventually lead to a more mature and sustainable growth model? Or are these signs of deeper structural issues that could lead to prolonged instability? While there are no easy answers, the fact that these debates are ongoing is a testament to the dynamic nature of our markets. Your investment decisions might very well hinge on how you interpret these signals, and that's why maintaining a balanced perspective is so vital.
Before we wrap up, let's take a final look at our key takeaways from today's briefing. The S&P 500 remains relatively calm at around 6,117.96, with minor movements suggesting that investors are watching closely but are not yet convinced of a significant shift. Meanwhile, regions of caution continue to appear, particularly in the Dow Jones. The Nasdaq's slight increase and the Russell 2000's notable gains suggest that sectors like technology and small caps could be gearing up for action despite the overarching uncertainties. In the cryptocurrency space, Bitcoin and Ethereum are showing healthy signs of growth, reminding us that digital assets continue to attract attention even in periods of broader market caution.
From the viewpoint of traditional news, the repeated headlines about Nikola's bankruptcy and Jim Cramer's top market pointers serve as reminders that even the most talked-about stories are often layered with nuance. Whether it's the heavy price tag associated with electric vehicle innovation or the intellectual tug-of-war over interest rate policies, every piece of news carries with it implications that stretch far beyond the headlines. And when you layer in the global ramifications from international trade to geopolitical shifts, the picture becomes even more intricate.
For those of you in the investment community, here are a few thought-provoking questions. How will the ongoing turbulence in the EV sector influence consumer confidence and technological innovation more broadly? Can the apparent cautious optimism in certain indexes be sustained over the medium term? Or are we looking at the calm before yet another storm? And perhaps most importantly, how should investors recalibrate their portfolios in response to the shifting dynamics between traditional energy, emerging technologies, and the volatile world of cryptocurrencies? These are questions that may not have immediate answers, but they are undeniably important as we chart the course for our investment strategies.
As we draw this conversation to a close, I thank you for spending your morning with me. It's been a pleasure providing you with an in-depth look at what's happening in the markets and what could lie ahead. Remember, our job here at PantheonAI is to serve as your information co-pilot, helping you navigate the intricacies of these turbulent financial skies with insight and clarity.
Before you go off to make your own investment decisions today, I encourage you to stay curious. Ask questions. Explore beyond the headlines. And if you ever find yourself mulling over a particularly tricky piece of market data or economic theory, feel free to reach out and ask questions to our AI co-pilot. After all, learning shouldn't feel like a full-time job.
Thank you for tuning in to this edition of the PAI Morning Briefing. Don't forget to come back for the next episode tomorrow for even more market insights, expert analysis, and a few laughs along the way. Until next time, keep your minds sharp, your portfolios diversified, and remember that in these ever-changing markets, every day brings new opportunities and challenges. Have a great day ahead, investors, and keep questioning the status quo.
Stay informed, stay engaged, and let's keep learning together, because learning shouldn't feel like a full-time job.